The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon. My pleasure to be at 877-927-6648. And after a lot of driving this weekend down to Pennsylvania, beautiful Bucks County. In fact, it was just a real surprise and a pleasant surprise to see that spaciousness and the hills and the dales and the vales and, you know, farms beautifully kept. Just it was just exquisite. And it was a surprise. I actually went that particular route accidentally, the scenic route, and it really was a scenic route. And it took a longer time to get to where I was going than I expected, but it was well worth it. So that is Pennsylvania. It's kind of that's where Paul Buck's estate is, that area, and well, I was surprised. I know that when I've flown before, and especially when I've gone down to Florida, I've looked down at different areas, and I thought those must be beautiful places to just walk around and to sightsee. So this is one of those places that I read about a little bit, but to see it was something special. So here we go. Market is down 11. Dow's down 13,332. S&P is down $1.88 to 1433. Comp index is up about 4 at 3,009. Gold is up $2.20 to 1726. And I just have to keep saying that I do see the lower highs and lower lows. Bounces could be quite sharp, but that's kind of what I'm still seeing at this particular point. Silver's up 23 cents. 32.33. We've got high-grade copper down again. It's 362. Dude, that says to me you've got it. I've got to watch this real closely, because if copper starts to slide from here, that's just not going to be a very good technical aspect in terms of looking at copper as it relates to demand and worldwide demand. You've got crude oil down 43 cents at 89.62, and our bonds are down 20-30 seconds at 146.30. When I look at the TLT, let me just go there. I'll do the black background for now. Let me just go to the TLT. Oh, as I change this chart, just have a look here. You see these patterns? My Master Trader Series Level 2 coming up this Thursday. And I will be talking, giving us a presentation for an hour or so at about 8 o'clock at the Investors Business Group this coming Wednesday evening. So when I'm on my way to the TLT, I happen to have the chart of the S&P daily up. You'll see that basically what we've looked at are the technicals have failed miserably. The MACD's pulling down, stochastics only at 53%. But the price, even now, days young, anything can happen by the end of the day, but we have not taken out the low of 1425.53, the low of the 12th of October, even with Friday's decimation. And I say decimation not because the S&P and the Dow fell very sharply, but because stocks like Alexion, which I'd been talking about for weeks, saying this is vulnerable to a very sharp decline. I'm not sure if it's a hat-trick decline in the monthly, but it is leg D. But certainly the daily looks like it's about to drop very sharply, and it could even go down if it fails under the 9-period exponential moving average, which it did. ALXN is a symbol at minus 596, trading at 101.66. If it closes underneath the 9-period exponential moving average this week, as it did on Friday, then there's a good chance that I've got a weekly sell, a daily sell mode, and a weekly sell signal, which, if on Friday it definitely closes under, I'd say underneath 102, so 101.74 right now, somewhere around 102, I probably will have to upgrade the weekly to a sell mode as well. That just leaves the monthly chart with the 97, 15, 200 period exponential moving average support. So that's just one. If you look at SWI, which was a number one IBD stock up until maybe 2 weeks ago or so. Hey, wait a minute. SWI. Are they off the list? They are gone. So, SolarWinds Inc. Oh, wait, 60.95 was the all-time high. Trading now at 48.70. Oh, okay, way too much. So, look at this. Monthly chart, peak E. If there's no new high in October above 60.95, hardly think there could be a decent rally, but I don't think a new high. 60.95 peak E with a doji top. In the weekly chart, stochastic only is 63%. MACD very poor. It says that this trend line, very important trend line, in this expanding wedge, that's let's see, an expanding wedge is, in fact, like an ice cream cone, a vertical diagonal ice cream cone, has extremely important support in the weekly chart. This week it'll be at about 45.64. If it closes under 45.50, that'll be a very big negative. First time it's closed under this major uptrend line. So when I look at these individual stocks, KORS, K-O-R-S, is now the number one IBD. That's holding very nicely, but I've got to watch it real closely because the high that it made on Friday and then pulled back, the high of 59.92 with a round number open of 53, I'd say you got to be real careful. Why? Because if it closes underneath 51.67, the low of the 12th, and let me make it a little clearer. If it closes under 51, give it a little room, 51.40, any day now, it says that the 50 period, no, that's a 20 period, the 20 period exponential moving average support will be at 49.73. That's going to be very important. So that's KORS weekly, and the daily says it made a peak D with that round number, but it's a long-legged doji. I'll be teaching about these different kinds of dojis that I use in the ChapmanWave Thursday in my all-day Master Trader series. Now, if you go to the front page, if you want to learn about these techniques, if you want to learn about how important the fourth highest peak is, peak D, if you want to learn how to count it, if you want to learn the simplicity of this particular technique in its concept and its application, and when there is a long move of peak A, B, C, and D, because it's a forward-looking projecting model, it means only at D do you have to start looking at other aspects. Is there going to be an instant restart? Are you going to drop sharper to the downside than the candle's low bar of D? All sorts of things like that. What is the implication? So at this particular point, the monthly is still very strong. Weekly is holding about 53.19. This is KRS, Michael Kors Holdings. So if you go through these individually, you will find that there are a couple of very strong IBD stocks. But the list is it's fewer and fewer that are holding very well. So with that, let's go to our first caller. Good, Mike in New York. Hi, Mike. How are you?
Good. Good morning. Happy Monday.
And a happy Monday to you.
Bucks County is a beautiful part of the
Are you been there?
country, yeah.
Yeah, it's really. But it wasn't so much, hills and valleys. I've been to hills and valleys before. What was really important to me was there was a sense of pride, a sense of architectural topography, about the use of land, about individual owners' stake in that particular area, and how to designate certain portions as, I suspect, farm, other portions for animals, horses, cows, sheep, or whatever it is. And even then the house, no matter how big it could have been, a little cottage, could be a big estate, however it was formed, it was like the residential area was beautiful. You would never, if you were looking at the house or the cottage or whatever it is, you would never think to look to the right or behind or ahead and say, hey, wait a minute, there's a farm attached to it. It's like suburbia with farms. So I was very impressed at that. We're talking about Nick of New Jersey says, we're talking about Pennsylvania, the Buck County area that I happened to drive through on Friday. And I was just so impressed because I've seen different places. The beautiful farmlands as you go from the airport in Rome to the city. You drive past. In London, the same thing. But this is an area that I almost looks suburban, but it's farmland, and it's the way it's the beauty that you can see, the pride of ownership. It was I was very impressed. Besides the fact that it's just beautiful landscapes. Yes. So you'd like to look at
Las Vegas Sands. I'm not sure. What would you recommend here? I think their earnings are today.
Oh, earnings, have they come out yet or not after the bell?
No. But I don't. I'm in a quandary. What would you? Which way would you go with?
Let me just ask you the first question, which is: do you have any position at this particular point?
I have a small short position right here, which is
Okay, give me 1 second. Yeah, let me just look.
Very small.
Okay, let me explain what I'm looking at here, because earnings come out as earnings surprises. And then it's not the surprise of the earnings, it's the reaction. For instance, Caterpillar early this morning was down over a point, and now Caterpillar's, I think, up a point. So it's the reception of the market and the response. It isn't the earnings surprise. It's how the market deals with it. Now, let me just tell you this, that you see there was a doji in the daily chart on the 18th of October at 46.45. Well, this is the second day after the doji. If there is a close that is it is the close that's going to be important. If there is a close under 45.03, but then they come out with earnings, so I have to almost excuse today and consider that tomorrow morning will be tomorrow morning by 9, not 30, but by 9:40 to 9:50. That will be a continuation of today's candle, technically. Or you can say theoretically and technically. Why? Because if the response comes out after the bell, you'll have the whole night to see what goes on. And then tomorrow morning, you'd have to see what the market's response is. Even if overnight it's up 3 or down 3, it's what the market does when it opens tomorrow. So now let's do this. Imagine it's 10:05 tomorrow morning, that the price is underneath the 44.91 low, that is the low of today so far. What I would say to you is, if that is the case, because the stochastic's only at 73 and not 80%, the MACD is about to deflect lower. I suspect there's going to be a touch of the low of 42.63, which is the low of the 10th. Now I'll give you the other side, and I'll tell you what I'm thinking regardless of what the earnings are. So I'll be back with Mike in New York. We're looking at LVS, Las Vegas Sands Corporation, trading at 45.09, down 19 cents. Basil Chapman, 877-927-6648. Dow's down 38, S&P's down 4.5. I'll be right back on.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. And so this is what I'm looking at here. In LVS, this is the chart we're looking at with Mike in New York, and earnings come out after the bell. Now, to my recollection, when earnings come out, it is very seldom that Las Vegas Sands has a very tiny move. It's usually quite a big move. Is that correct?
I think so. It should, yeah.
Yeah, I can't remember the exact days. I probably could go and see what days it is. What I did want to do is I wanted to go through the chart using a white background. So I redid my notation. And I did my notation on the 120-minute chart, which went from a low of 42.63. That was at 3:30 on the 10th of October. And it went to 1, 2, 3, 4, 5, 6 higher peaks to peak F. It got repelled, that's why I wanted to do it. I want to be able to draw these resistance lines in. It got repelled right at the candle of the 1st of October, where the high was 47.09, the high, this last move was 46.45. So it couldn't get into that candle area. So that's very strong resistance. So it's real simple for me. If at any point from the announcement, but I want to see a print. I don't want to hear just after hours. I want to see a print. If there is a print above Right now it's at 45.09. If there's a print above the candle of 4 o'clock on the 18th, that's at 46.07. So it's about a point higher. Then there's a really good chance, and that is at about 5 minutes to 10, 5 minutes past 10 tomorrow morning. And that's after tonight's debate, because there's also going to be a market response to the debate. Then what I'm thinking is that there's a good chance that it's going to go a little higher than that last move at 46.40. Now, you've got to determine, there's a technique that I discussed the other day that we saw in Costco. It's called the rogue wave, where the price makes a peak and all the technicals are pointing down, and you're absolutely correct in being short, except for one little thing. There's this one momentary up spike where the tide didn't see the sign high tide at noon, and at 12:06 there's one wave that goes much higher than the others on the shoreline. So if it pops up to over 46.45, but my guess is it's going to do that all by no later than 20 minutes, by 10 minutes to 10 tomorrow morning Eastern time, 20 minutes after the bell. If going to 5 minutes past 10, it's giving all that back, that's going to be a rogue wave, and there's a good chance it's made a top, and it's going to come all the way back down. It's going to take out 44.91 low, which is the low right now, and it's going to close much lower, and it's going to go to the 43.77 area. What would indicate that it's not a negative response to the earnings announcement is that if there's a steady move up all day tomorrow, if it gaps up and then there's an even higher move up and it breaks above 46.45 and it's holding above 46.20 as it goes into the bell, then I would say to you, aha, that means that the weekly chart that I'm looking at right now, we're skipping the daily chart just for the moment, but the weekly chart, and I've got this as a blank chart right now. I just want to show chart patterns. So let's go here. There we are. And in the chart pattern we're looking at, it's gone to peak A and then peak B, and it's holding really well right above the above the 9-period exponential moving average, which is at 40, and is being covered right now. So it's around about 44.53, and the 200 period, which is at 42.41, and the MACD is okay. It's okay. And the stochastics at 79.54 and holding steady. So it's going to be the announcement. Now, you say that you've got a little bit of a short. What I would say to you is, if this does pop up tomorrow, I'd be very careful, because if it closes above 46, it closes anywhere close to 46.45, but by Tuesday it's trading into the 46.90s, I wouldn't be short, because that weekly chart is going to say, you know what, it's not telling you that it's going to go all the way to a leg D, but it says, hey, there's a real good chance that if it retests the 46.90 area, it could have that quick pop to 47.60, which is start leg C in the weekly. So that's why I'm saying to you that there's a Roman candle, ChapmanWave Roman candle of last week. If at any point it dips underneath 44.03, the low of last week, then that candle, the wick of that candle becomes like a magnet, and then I would look for the 42.41 area within a week or two. So I hate to say this, that it could go up and it could go down, but the weight of evidence right now says that unless, because it had a very strong move over the last 2 weeks, that unless it really breaks below the 44.50 area, there might be a little bit more upside. So I'm going to say to you, let's look at it again tomorrow, because tomorrow we'll have enough information to say, great, now you can go short because there's a good comfortability factor, or be careful because there's more upside to come. Thanks for calling, Mike. I appreciate it.
Thank you.
Thank you. And I see Nick in New Jersey says, hey, that's near my home in New Jersey.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Hi, folks. Basil Chapman. Whoa, I have to do the voice there. Incidentally, I will be doing Larry's show today straight after this, and so get your calls in if you're interested in different commodities or whatever for the next hour. But in the meantime, right now, what we're looking at is a Dow that's down 30, S&P's down 4.5, and just kind of a follow-through weekday from yesterday. Some stocks are actually holding up pretty well. Some are not. Obviously, when you've got this many stocks, there are going to be some that are holding well and some that are not. But actually, for me, there are some important stocks that I'm watching that are not showing the kind of strength that would be needed after the big move down on Friday. So let's go to, so we were looking at Las Vegas Sands with earnings coming out after the bell. And basically, it's just one of those, it's one of those things that if you're on the long side, I would say stay on the long side. If you're short, it's just real easy to close, pop-up close, and you just got to protect yourself, because if it holds into tomorrow's last hour at the highs, that would be a very good sign. So it's very difficult. Now, what I want you to do is, looking at just a real quick question I had on the TLT, I'm just going to mention it here, and then I'm going to our next caller. The TLT is down 28 cents. This is the Lehman 20-year T-bond fund. It's that weekly chart that I'm looking at that is really telling me what's going on, because if there is a close below last week's low of 119.87. It also puts it underneath, just a tad underneath this rising trend line, which has been key support. So, yeah, can bonds and the market go down at the same time? Sure they can. But a great deal of the time you will see money flow from the safety, what they call the safety of bonds, when you're paying 140 something for a bond that is going to close at par, even if it's 30 years, and it's not giving you any dividend right now, any interest, that's quite something. So it's because the Fed's pushing to keep the bonds higher. So I'm looking at this real closely, and what will be needed is by Friday afternoon to close, if the TLT is above 124.14, that's only it's less than 3 points. It's 2 3/4 points above here. It should do it, but if it can't do it, that's going to be important. But if it does close above that level, and then the 125.24 high of the week of the 28th of September will be in target. Let's go to Lou in Nashua. Hi, Lou. How are you?
Fine. How are you?
I'm very well, thank you.
Good.
You'd like to look at?
Price line.
Okay. PCLN is Priceline, Priceline.com, online services, got the hotels, rentals, all sorts of things like that. However, this is a stock that made in the ChapmanWave a peak F top at 774.96 in April of this year. It made a 626 round number low in March, and it didn't make it in the monthly chart after that. You know, to make it on a monthly chart is really crazy, because it has to be either the very open, the very first day of trade, if it's a low, and then if it's a low, that means that you've got the entire month to go through. And if it's near the opening of the month, like the first 2 days, it means you've got the entire month, which has to move up strongly, which is exactly what happened. Now, what's really important is that it pulled back, and then the monthly chart has a candle in July with a high of 695.15 and a low of 618.57. That's that's almost an 80-point differential between the high and the low. Now, what's important is that since then it has not been able to close above the wick low of 618.57. 690. Oh, we did it just by a fraction, 619.07 in September. But even that was under the 9-period exponential moving average. Everything that I'm looking at in this particular chart has been saying for weeks now that Priceline is probably going to test the high of 561.88. That was the high of May of last year. And that cup and ladle breakout formation will be very important. Why? Because if it dips down and holds underneath that high, all of a sudden you're starting to fill the cup. And that means that you've got a pattern that says, be careful, because that extension from the 560s to the 774s going into the high of April of this year, we'll see almost a complete give back of that rally. And there's a potential for a cup, there's a potential for a head and shoulders top to form. So that's the monthly, which says, unless in October there's a decisive close above 610, which is the 9-period exponential moving average, you've got to be very careful, because the technicals are very poor. All right, that leads us to the weekly chart. Do you have a position at all?
No. Thinking of shorting here.
You have been shorting, or you are short?
No, thinking of doing it.
Okay. Now, one of the big problems with shorting is this is either the perfect time or the imperfect time. Let me just explain to you what I mean by that. Because it made a low of 553.42 the week of the 10th of June, and then 557 slightly higher the week of the 17th of August, and then retested last week at 555.47, and so far today it's 557.94, almost the same replication of that pattern. It says that I have no choice but to quickly go to the daily chart, because if the daily chart says that the weekly is making, that pattern that I talk about, the lower H, it's called the dreaded H, the lower H pattern, where you retest the left side low. It broke the left side low when Priceline broke under 603.49 the week of the 8th of June of this year. It rallied a little bit, and then it failed, and it plummeted lower to the low of, let me type that in, 553.42. So 553.42. So now let me go to the daily and see what the reaction is so far. So now that low that we're looking at has made a peak E-top at 649.30 in the daily. And here we go. Now I can give you the analysis. In terms of shorting, the best opportunity for safety, risk-reward factor, I actually can't say risk-reward because it could still break down. Now I'm really talking about the safety factor. That is, you enter a position, and because the position says that there's a risk to reward of 1 to 2 or 1 to 3, the higher the better, that it's a good time to put the position on. This one is testing. There we go. I had to just type that in. So 555.47 is the low of Friday. There's a higher low today. It hasn't taken out the 553.42. Let me type that in again in the daily. 553.42. It hasn't taken it out yet. It would say that if it broke underneath 553.42 and held into the close, and it really broke it, it goes to like 551 or 549, and it held there, that would say, okay, now it could go even lower. But what happens when you get close to a support level is that if there's a single move down below, it says, be careful, because that single move could also have a rebound just to say goodbye to its friends back in the arch formation. That could take it back to the 561 to 565 area, and then it'd be ready. So my answer to you is the risk reward is not there, even though the price might drop, but just in pure practicality, the weekly and the daily are saying, hey, there is some support here in the 553 area. You better be careful because it could rebound quite quickly. So I'm going to say to you, unless you can see a rebound to the 582 to 588, actually it doesn't even have to go that high. 5 to the 579 to 583.10 area. If it rallies there and then it starts to arch over, in other words, there is a strong day or two, and then the next candle has a lower high, that would be the chance to short, and you would put a stop. You can make it 1 penny above the most recent high of the day before. So yes, my specifics are, yes, if it broke down from here, it could have a very sharp move down, but the risk is that it's so close to the support that's held before. Even the weekly chart held above the 553.42 level in price line. I would have to wait. I believe that you're absolutely correct in looking at downside targets in price line, especially if you look at the monthly chart. And if the weekly chart at any point does break and gets to the 547 to 545 area, that'll confirm that this thing is headed towards the 418 200-period exponential moving average in the weekly chart at some point in the future. Not yet. So there's another way to do this, and the other way to do any rally in the next day or two without waiting for the turnaround to the downside, you could spike as if it goes above today's high of 574. You could take just a small position. I wouldn't use options at all, not yet. An option I'd use on the put side if it bounces to the 483 level and then starts to turn down. But right now the risk is a little bit too much. So nothing yet. Start a position if it starts to push over today's high. But my best advice would be to hold off, let it bounce, let it go above today's high, let it even try to go above Friday's high of 578.61, and then reverse. That makes an even smaller arch formation, which says I should now quickly go down to test the 553, 55 area. So I hope that helps you.
Yes, it does. That sounds good.
Thank you very much, Lou. Lou in New Hampshire, we looked at price line. Lou was favorably inclined to short, and I would agree with him based on what I've seen. The 200-period exponential moving average of price line at about the 613 area. It says that whenever it gets to this particular distance, not whenever, but it's done it twice, and the first time it rebounded strongly over the 200-period moving average. I don't think it could this time. I think that's not going to get to 612, not in this particular move. It needs to consolidate first by retesting the lows of the 555, 53 area. But if it does pop towards the 578 583 area to the 587 9-period moving average and then fails, that would be a great time to short it. Why? Because everything about it tells me that the monthly chart is going to be going lower. So that's price side. Now, I had a question that Dan, would I look at the TLT? Yes, I spoke about the TLT moments ago. Let me just do something else about the TLT. Now, this goes towards the ChapmanWave methodology, and it's a methodology that has very specific specifics. And then, like any technical set of indicators, there is a moment, I would not say fuzziness because it either does or it doesn't do something, but there's a moment where in your look-back period, there could be another wave count. And if that happens, you have to be cognizant of it. You have to be aware that if there's another wave count, that alternate wave count could turn into the priority. So now let me look at the TLT and be as objective as I can. In the ChapmanWave, it says, from the start of a buy signal, you can go back and retest that buy signal low, but you cannot break under it, even if you break under it and close above it. You cannot, that's called a restart, and at that point you're supposed to start a brand new peak A, B, C. The previous one becomes an A minus, a failure. Well, if I'm very strict about the TLT, from the low bar of 87.56, it ran up in a single leg to leg A and then peak A at 100.31 in October of 2009, and that's from the low of June of 2009 at 87.56. Then it pulled back. Where did it pull back to? 87.30. Well, if this was a daily chart or even a weekly chart or anything shorter than a daily chart, there's no question in my mind that would be the brand new start where I've got the up arrow. What happens is it goes to another single leg A up, and then it pulls back from the 87.30 level, it goes to 109.34, and then it pulls back to the 200-period moving average. That's that line there that I've just got dots on. And what does it do? It holds at 88.14, much higher than the 87, not much, but higher than the 87.30, and then it soars to another leg up, which becomes a peak at 125.03. And that was in October of 2011, so this is a monthly chart. And then it goes to a higher peak at 132.21 back in July of 2012. Ha! Now, here's the question. Because it's a monthly chart, we're going back so long, because the 87.56 was broken by 26 cents to the 87.30 level, and then the next low was quite a bit higher, 88.14. Can I really expect that the TLT, which is a derivative basically of the 30-year T-bond, U.S. T-bond index or contract, can I say that 87.56 was really the start and that 87.30 shouldn't be counted? Because if I do, then I've gone peak A, which is this pink color, peak B, peak C, and I've got a peak D, and a peak D you can get a major top. Stochastic is pulling back. It's at 84.20, still very strong, but it is pulling back. And the fast moving average, the green line of the stochastic, is pulling back. So I say to myself, I don't know what to do. I don't know what to do. I have exactly the same issue when I go to the when I go to my very long-term continuous contract, and that's the one that gets smoothed out. So what does it say? It says that there's a chance that I'm not at peak C in the TLT and peak C in the bond continuous contract, but actually leg D in the TLT in the monthly and E in the monthly T-bonds. And that says, regardless of what the Fed's doing, that was a major top. I'll be back and we'll talk about it for the remaining period.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. We got a couple of calls and a couple of questions. So I will be doing Larry's show. So if anyone's got questions that I'm not able to get, hold on, and I'll take you straight after the break, and we'll do it in Larry's show. That's number one, or call Larry's show. So the first question, I was looking at the TLT and bonds, and I said I'd continue with it. I had a question in the den about PAS, P-A-A-S, Pan American Silver. So far, the action's good. It's that weekly chart that I'm very impressed with. So if in the den you're there, hold on for the next show, and I'll do it, because we've got a caller on the line. We've got John in Philly. Hi, John. How are you?
Good morning, Basil. Thanks for taking the call.
That's
By the way,
pleasure.
Basil, thank you very much for doing the monthly chart TLT ChapmanWave count analysis.
My pleasure.
What I'd like to do is direct attention to one thing.
Yes.
I recommend in the strongest possible terms that when doing bond market analysis, one, not start with either TLT or an ETF. Likewise, do not start with the futures contract. Instead, I advise starting with the yield, the rate on the 10-year U.S. Treasury to begin with. There's all sorts of problems that come up with basis, with fees. that can cloud the Chapman wave count, especially, Basil, when your Chapman wave count is very particular about even new highs or new lows by the smallest of fractions. So, having said all that, if you look at the monthly 10-year Treasury note yield chart, you will find that the 2009 peak was higher than the 2010 peak. Hence, the actual straightforward Chapman wave count on that monthly chart, on that yield, is actually in either peak D or E, and that's a little bit different than TLT.
So that's the TNX, and I'm going to show you something else that's very interesting. The TNX in the monthly chart, actually, I just took off my black one, only went to a peak C. That's what you, no, it went to a peak D. That's right, 52.41, and then it went to 53.16. In June of 2007, it went to the peak D, requisite peak D in the Chapman wave, and then it started to come down. The failure came when and that's exactly the clue that you look for, is that arch formation that was formed from the low of December of 2008, or to those highs that came back and it broke under it. What's happening now is that the MACD is turning positive with the price. Very poor price action, but it is moving above the 9-period moving average. And the stochastic still only at 12%. So even if I look at that, but what I really wanted to do was look at the weekly charts. When we talk about the Chapman wave, if you look at the 54.08 cluster high, I spoke about this last week, the cluster high back in June of 2007, where they were so close together, the 30, the 10, and the 5-year, they started to spread out when the law of 25.19 was made back in December of 2008. They went to peak E at 48.43, pulled back, went to another peak E in the weekly chart to 48.58, John, which is 15 cents higher. Then it pulled back, and then it went another 41 cents high, went to the third peak in the Chapman wave back in the week of 11th of February. So that shows the power of this particular waveform, number one. And number two, what it does is it shows that arch formation, which already turned into an M formation, like lowercase m for mother, at 26.94 and then 25.10, and then retested again successfully at 24.52, the low in July of 2012, has made peak B. But it has a pattern. It has a pattern. Oops, there's the music. So, John, I'm going to spend a little more time on this pattern. I'm not sure if you want to hold on through the break, but I'm going to spend a little more time. I'm going to explain some things that are going on in the 10, 30, and 5-year yields that are very obvious to me at this particular point. We'll go on. I'm doing Larry Pasavento's show. Trade what you see straight after this. Hold tight, everyone. I'll be right back.
Are you